to the Breakfast Club. My name is Darren Hancock, and we are on Friday, the 30th of August, 2024. This is the daily chart on the NASDAQ. And as you can see here, we have today pulled back into 50% of the wick created from yesterday's daily candle. So we're sitting right on the equilibrium of that as the high of the day. So what I'd like to see here is whether or not that 50% of that wick holds price, and we start to retrace now and start to go lower. That's like a pivot area for me. If we can close above that on an hourly, I'm looking for these highs again. And I'm not looking for that spot. You're looking for that. See how the equilibrium of this candle here was hit multiple times? There's a large pool of liquidity sitting up here, but that 50% of that wick is a kind of a key area for me. If that holds, then further downside prices, and if we tend to close through that on the range created from 9:30 to 10, we'll see if we start to run up higher, or if we start to pull back through today's open and start running back lower for liquidity below the market here. Four-hour. Watch this. I go here to here. 50% of that wick created here. What? See this? Right to 50% of that wick as well. Coincidence? Daily and a 4-hour wick to 50%. Let's go down even further. There's the 1-hour wick and a return to a full fair value gap fill. So it seems to be a key level on these 50% of these wicks. So if we want to see this roll over here now, and it's going to get below here on the hourly for me, I'm going to close and start getting back into this daily fair value again and start going lower. Otherwise, we're just working inside that range right now for the hour. Inside that hourly fair value gap, that is. Get this out of the way here. We're at equal highs above us. Some might think we're gunning for that. That may be just left open. Continue going lower. I want to see it get through. Initially through these lows here. Clear out the sell side on there. These order blocks right here, I want to see it. If we can get down below these, then we've got ourselves a change of direction, reversal. And I expect to see if there's some support off of that in this fair value gap here. We have a high taken. We have not got through this low here yet. We just came back, filled the fair value gap, went higher. We have a small fair value gap here. We have now traded below it, come back and tapped it. So you'd like to see that now react off of that and start coming back lower. There's nothing else above us here except for maybe a small imbalance right here. Oh, we filled it already. It's the 15-minute. So we got ourselves some things to look for on the daily. 1 hour and 4 hour. Our higher time frames so far support that 50% of the daily range. You want to see that wick hold. If that gives way, then we're looking for this higher stuff. This higher pool of liquidity up here. So let's go to Bitcoin. You got pool of liquidity down here, below the market. Run back up into a premium array. If this gives way, we still have another one up here. If we find some support off of this fair value gap below us here, and then rally higher into this little pool here, or fill the fair value gap initially. We're in a consolidation here, so on an hourly basis, I'd like to see that dip back down into here. These are the two areas that you're looking for some support or resistance off of. Soybeans were finally up into that area we've been looking for, and now we're through it. So you can see how we got this little reversal right here, this little tiny fair value gap right there we've talked about in the past. Trades through it, then comes back to it, finds support. Now we've been pushing up here through a few days looking for this level. So we have a fair value gap above us. If we can get through this on a close today and find support here, leaving this open as a breakaway gap, I'd like to see that start running up higher into this breaker here. That would be the next upside objective. So what we see here is what we see already completed here. See how it's run back to that objective is what I'm looking for here. This one here has already hit it right there. So you see how that reacts now, and you want to get back down into this level here. Just come back and tap the top of it, leave a piece open, and continue going higher, looking for liquidity above here on wheat. So I'd like to see this now move to here. I'd like to see that stay open, tap that, and go. We're not going to call it sell side liquidity though. Just so I'm going to see it freeze right up on the top of that, leave it open, and dip down into the consequent encroachment of that, and then go higher. But I want to see that going to stay open. We're just shy of that, so if we can come down just below that, or just above that consequent encroachment and keep driving higher, that'd be nice to see. And if this just keeps driving through this mean threshold of this candle on a close, then we may see a run for the highs first before coming back down below this, or at least the rejection block. That's what I'm looking at. Coffee, we've been calling for this area here. We're finally getting a dig down into that level. We've just come back to this candle's wick. It's low. And let me just make this a little bit bigger. You'll see what I mean. See, there's a small little gap right here. And we traded through it all the way down to here, opened, traded all the way back up into it, and now we've got opened here, traded all the way back into it, retap that reversal above an old high on the daily. So what we're showing you on the 1 minute happens fractally throughout all the charts. We got to return to here. Then you look in here for a reversal. So that's the 4 hour. The 4 hour would have been from here to here. This wick. Weakness would be 25% of that wick. Doesn't even make it up to 25% of the wick. Just comes back to just shy of tapping this low here. We're inside this wick. So you have a fill, a reaction of that note. There's nothing other than coming back inside this range. That's the daily at the 4 hours in the same area, but extended. And we have 1 hour. This is the 1 hour. 1 hour is huge. We come back into relative equal lows. Bodies respect those lows. and continuation. So we're looking for these lows here and the relative equal lows below the market here for coffee. That'd be where I'd be aiming for. So looking for yesterday's low. There's an imbalance right here. Keep your eye on that and the mean threshold. So I'd like to see yesterday's low get taken and then look for a further drive down for the liquidity below here and this fair value gap below you here for coffee. Cattle has finally come back to that level we were looking for. We talked about this, all this happening. So we want to see this get through here. It did. Coming back, do we find support at this? So anywhere inside here would be a long. So we're looking for a long in here. The ideal long would be right there. So if you're wrong and it trades through it, trades back to it, you get your chance to break even on that. Otherwise, you got a really nice run for this liquidity right here. That's the first place you're aiming for. Okay. Cocoa still inside that gap. Keep an eye on the consequent encroachment of that gap. Trade through it 50%. See if that 50% continues to allow this to come lower. From that open to that high, take 50% of that, which is somewhere around here. You can see how we were working it for quite some time. Now we're coming back, finding support at it. We're rolling over here now and coming down deeper. We're just going to work it for a while. Again, you're going to make sure you get the high or the low of that. Find some support off of that. Continue going higher or lower. This was the trade below here. Did that actually close below there? No, it closed right on it. Came back all the way up inside it here. And then gap lower and finally took out this low. Now if we can trade back inside this breaker, I'd like to see that get some steam now and start going lower on lumber. And you know, these BISIs, there's small price imbalances and gaps in price action here that you'd want to revisit on the downside. That's the area there to go short. Let's be on here. The lean piggies is still frozen on that level. Does it support it? We want to see it get back up on here, start pushing higher, or get below this and use this inversion as support to go lower. Gold, look at that. 1 hour. How do you like those wicks? Like syringes sucking the life out of you. Lots of relative equal highs above you. all this liquidity has been worked on the downside. It's leaving this liquidity above us open. I just want to point out these premium and discount areas again that I so enjoy. Inside a range, you have a discount. I'm sorry, this would be the discount one down here. That's the furthest one down. Right there. So when you trade off of here, come back, see how the bodies of the candles respect it. Worked a little bit of a scare. If your stop loss is sitting down here, we traded above it. You come back inside it. You come back just shy of tapping it again. Are you looking for a premium array? Ran right into it, came all the way back down and tapped it perfectly again. Then ran all the way up into the little gap and stuff here. Bodies respect the top of the fair value gap. You come back into this 50% of this range or more to the session open. Key levels. Look at that. Bodies respecting that premium array again. And you want to see that trade through it and come back, find support at it in order to run for these highs. I just think that's a beautiful thing, that price action. And I do like inversion fair value gaps as premium and discount objectives. Michael hasn't mentioned that as a strategy yet, but I think it's something I see continuously repeating from one premium to discount inversion inside a range. For example, you see this guy here. Inside this larger range. See that? React off of it, come back into 75% or more. Optimal trade entry, reversal inside this range. %62%. Fills a fair value gap down at that level. We bounce off equilibrium for a bit. Now we're running back up. So this one here, we're inside this range. I like that one. And then back up to here again. Well, there's really nothing left inside this range here. So either we're going to push through this one or we've worn out that last imbalance right here, the SIBI. I'm going to see this fair value gap here give way on the downside, take this candle out and use these as support to come back down into this range. So you just come back into, what is this? %62% again. That's a fill of this fair value gap. and keep your eye on this guy here. And you've got obviously equal highs above you here. Oil. Oil's ran up the last few days' lows, and we're just shy of filling this fair value gap down here. That'll be 73.47. If they don't fill that, we've got this reversal happening right here, right now. So I'd like to see that come back into here, this little range here. See what kind of support you get off that. If this gets taken on the downside, on the close, and we lose this low, then we know we're looking for that 73.47. See how we got this one here? We've taken out these little highs here. We're back inside this range. So you're between here and here. We've come back, found some support at this. Right now, we want to see that pop up and get through here and go higher. It's already ran out the liquidity on the hourly. Let's have a look at this guy here. You want to see this stay open here now. That's a breakaway. This consolidation, you break away from it. And use this breaker now as support to go higher. If we get on the other side of this, we don't want to see this candle get taken. So right now we're into this, all these little highs have been taken out here. A little fair value gap sitting here. We've traded below it and we're almost traded back into it to get short inside this range. Looking for another discount inside here, either to go higher. We'd have to take out this low for this breaker to break that high. These cluster of candles here. So if we trade back into them right there, and go higher, leaving that open is what I'd like to see. But this breaker, I want to see if that holds price and see if this fills. This is the 9:30 open now. Just taking out this. Just seems like it wants to run on that liquidity there at 830s high. Find that liquidity out here. I'll look for this liquidity below the market here. Just run out the hourly. Perfectly. So at this discount array now, we ran that high. You want to see this, run these lows out here now and start digging down deeper into this stuff. These lows here. Just took out the lows there. Well, so we're in this consolidation now. The lows taken. Now we're just going to wait for some setup to occur. This being the new range this morning. Good morning, Hans, Dave. Happy Friday, my friend. Good, happy Friday. Abs, good morning, good morning. And Curryfish, hi. Craig, good morning. Riley and Falls, would you consider adding that to your core items to track for a bit? Natural gas. I've got money in natural gas. Let me have a look at natural gas. I haven't got that gas over here. Are you looking for United States natural gas or just regular natural gas? I've got that in my list over here. I'll show you guys this one. That's natural gas here, United States natural gas here. Let's look at that gas here. Daily, we have highs taken out here, return to a fair value gap, breaker. Right up inside that here. And then you look for a fair value gap to form. This little small one right here. Trade down, come back up inside it. Aiming for inside this range. Discount array. Inside the discount array, equilibrium of that discount array. Run back up through this. Just popped up, traded or started above it and then gapped through it. Again, continuation. So that little fair value gap there was like a key play you want to be watching for it to trade back into it to get a short, or trade above it and get long. It opened above and traded right back through it again in one day. So it literally stopped here, gapped up, came back through, and continued on taking these lows. And what are we aiming for down here? See this big gap in price here? So between here and here is what you're looking for is the downside. So the downside objective for natural gas. Now we've hit it. See, we come back to the discount array, react off of it, take up some highs. It popped below it one more time here into that range. And now we've gapped up. You'd have to take this high out here for me to get excited about running up into this range again. But otherwise, you're in the premium portion of this range here. I'd like to see that come back up into this candle sensitivity here. But we're at relative equal lows. Small consolidation. We fill this fair value gap here. So do we find some support above this and go higher? Right here. So you're sitting right in here, above or below. Run back into this gap, equal lows, relative equal highs. So you're right in the middle of that range right now. So you have to wait for that and make up a move. Probably got a few days of waiting on that one. Took out the lows. So high, seek and destroy. We took out the highs, take out the lows. You have relative equal highs still and relative equal lows. So we've seek and destroy that quick liquidity here above the market and quickly below the market. They've paired those two up. Now where are you going to go? I've got nothing in here for launch point. So I'm sitting on that, sitting still on that. Morning, Russell. Lambo, good morning. All is well, my friend. Vittorio, good morning. It's been a while. Yes, it has. And good morning, man. So far your morning range is super sloppy. You have nothing setting up right now, so it's just a wait and see game. Watch, see where we're going for which liquidity. Keeping in mind that on our daily chart, we talked about this 50% of the wick. %50 of yesterday's wick. We hit that already today. So I want to see how, if we can continue to react off of that, come back lower, or we're gunning for that liquidity above the market, reaching for yesterday, the last 3 days, that liquidity that's up there, which would be nice to see it run that out on the hourly basis. And I don't see anything that says jump in there just because it's close. If you start chasing price right now and you get beat up in this constant back and forth motion, you're just looking for trouble. You're just looking for a cheese grater to run across. Right now we've traded above this candle. Look for this candle here to provide support, continue going higher. If we lose this candle, then we're coming back into this range. Sitting here watching paint dry, this is where you got to be in the markets. This is where you're disciplined enough to be able to watch and study price action in environments like this, and know that this is not where you want to be putting any of your money at risk. Yeah, you can see some short-term objectives, but you know, you must pull a one-arm bandit if you expect to gamble on that run to those objectives. Yeah, we saw it running for highs, but you know, and this order block has been providing us some support. But again, it's such, there's not a decent setup in here. So not something I would go rushing to take care of. Watch this level right here now. Good news there. Abs. That's really good news for you. I'd love to hear that. So you want to see this low get taken here, not just a stop on there. See, get taken out. I'm just trying to stay on price action, not looking for an entry here. This is super sloppy price action right now. And they will eat you up. They will eat you up. Watch this one here. Pop inside. Right back to a full. There's a little price imbalance up here as well. Watch that react off of here. Start coming back down now. It's a little tiny difference between this candle's low and that candle's high. We just filled it right there and filled that fair value gap. Now do we just react off here and come straight down? And we were calling that before it happened. I like to say we, like I have all my multiple personalities at work here. Imbalance right here. Taking out these lows, coming back into the range, 50% of the range. Looking for liquidity below the market. You had your perfect entry right there. It's very messy there, Russell, very messy. But there's one right there. Not that we're looking to trade that, but if you did trade something like that, again, you're looking for your ideal spot right here. If it trades through it, you're looking for that as your wiggle room. But I'd like to see it freeze on that and come off of there. So it came up, hit the level we're talked about. And then you want to see that start running back down inside this range. So as soon as it hits 50%, you move your break even, take a chunk off, 62, move to 50, take a piece off, take a piece off, take a piece off. And by the time it came back to here, it would have ran all the way down to here. You like chunk, chunk, chunk. And then as soon as it popped back and took you out, it's 70%. And look at this reversal. You caught the perfect run from there to there inside a small, tight little range for optimum trade entry reversal. Finally come back and take those highs out. Now, do you have the discipline to be able to follow this fib rule? Again, it's just one method of many that you can use to manage your trades if you're not into breaker. Looking for this breaker here. Takes out a small high here. Last down close candle runs up all this stuff here. You could say this would be a breaker as well, taking out that high. Inside it, mean threshold right there. And then run the high. So you want to see if this little level right here provides support. That stays open. Let's see if that pushes higher yet. See how they come back into that little imbalance right here? Ran through it, come back, double tap it. Inside yesterday's fair value gap. So that those equal highs are looking better all the time. Six more minutes. There's a lot of liquidity down here. Looking for this level and this level. Now that we've taken those highs out, and the highs that were created at 8:30 and 9:30. If we trade through here, from here to here, which will also be this guy here. Let's worry about that one right there. That should cover both of them then. Yes. That will cover both. So we'll watch, see how it reacts inside here. Equilibrium brings us right back to this fair value gap here. If we just look at this, these are small little lows here. I'd like to see a significant low get taken out before you look for these inversions to give support on price. But either way, they're still inversions. I like this big wick through here right now. Usually you like to see it just come down, stop, hold on it, and just leave right away. Not just cut a wick right through there. So obviously this breaker here, last down close candle in a swing of a high, low, and a high again. That's a breaker. Taking out those highs. We're back inside it. If that provides support, and we get some support here and pushing through, you're looking for higher prices and support inside this fair value gap. Mean threshold, if we close below this on the mean threshold, then I'm looking for another run below here and here. All right, so you've come back down, ripped into this. You've closed above it. Tapping the level again. See how that? Watch 50% of this wick. And consequent encroachment. Now you're looking for this to go higher. And you want to see it get some legs out of here too. Maybe 5%. Looking for a run higher. Just came back in 25% of this wick. And that candle's mean threshold, and this little imbalance, it came back, revisited it right on the level we said we wanted to see, and go higher. See, get some legs here now, really get some motion. So this, all these levels line up for me. 25% of that wick, 50% of the BISI, and a return to this level, all confluences right up inside rejection block. And away we go. Let's gun for those highs now. There's a huge liquidity pool out there. There's a nice drawn liquidity too of the weekly new week opening gap above us. Anybody else catch this entry? I want to see this stay open here now. So my upside objective is 703. Right up here. And we want to see this stay open here. Come back and tap it. Or come back and tap this old high here. I want to see a portion of that, or at least the consequent encroachment and below stay open. That right there. That's where you want to see it stop. I want to see it get some legs and just shoot straight up. Yeah, it loses luster when it comes down that fast. You're looking at that abs. See how body takes a bit of reversal here. Body closes below here. We didn't get a chance to get up above it. I want to see this trade below that now to get a change in direction. We've got lots of liquidity below the market here still. And we're just bouncing right off of that breaker on the hourly. That's what we just hit right here. So you have to get back up through here. I'll just say come up a little higher into this level here for short inside this range here. No body below here yet. Still not work up into here. Good morning, champion. Fine, we're tapping off of that now. We haven't taken a low out yet, so see if that runs up into here and see what can, if we get some support off of that to continue going higher. Or do we roll over here inside this fair value gap to go lower? So this one here to go higher, this one here to go lower. Looking for liquidity here. This is the discount inside this range. Here's the discount array, which is overlapping this one. I want to see it come down and tap that. You tap that discount array. Now see if we work through it, or we just come back up inside this here. So now you're between here and here. I'm waiting. So you see how we're kind of just bouncing back and forth here. We've gone from reversal to the discount array, hit it all in one candle. And now we're going, which one do you want to get above or below? Either run for liquidity below the market or start to run back up for that huge liquidity above the market. So for me, this wick here, 50% of this wick is key. And we've come down to that 25% again of that wick. Reacted off of it. So I want to see this start to really push through here now. I have a dream. I have a dream the price will be supported in this area. Now, if you're running for those old highs, wouldn't you come down here and pair these guys up with that liquidity in the hourly or there's the daily? Gather up some more orders before you take these, all these people who are gunning along, come down, gather them up, and then pair them up with the guys that are short on the daily. If its level provides support or resistance. And then you want to see if this mean threshold loses price. If we trade through the mean threshold of that, we're looking for downside. Well, if you're into this reversal, 25%, you come to 50%, you move to break even, you take off half your trade, it finally comes down to, sorry, 60. Let me put this one on here. It's 62% right there, and you move to 50%, and it would have taken you out there. So you would have capitalized on, even inside this little range here, you would have, sloppy as it is, you still would have caught some. You got to be disciplined enough to take it out of there, though, and use that as a method, if that's a method that you want to use. Morning, Derek. I would imagine Michael's doing a session this morning. Yep, looks like he's doing a session. Still finding support off of here. Watch here. See that right in there? Traded above it, come back inside it. Now we traded below it. Back into this one here. Find some support off of this. I want to see this really start getting some legs, getting out of here now. Get above this candle. Either way, like I said, we're stuck between these two. close below it, come back up inside it, really tight there. You see that? Run, froze on it, close below it, comes back up, gives you an opportunity to go, oop, I'm on the wrong side, and we're going lower. And you may think that's really subtle, but it's there. Looking for these lows. This is super sloppy price action here. Yeah, probably. He always says, oh, I'll just do a short one today. And it ends up being a long one. Yeah, you got to wait for something clean because it's pretty sloppy in here right now. Through the mean threshold of this candle now. I want to see this start digging down deeper, taking out these lows now. Yeah, I do like the equal lows. This become one of those deny you yet again. Just keep screwing with your head. Keep staying inside these ranges. But there's big pools of liquidity now, below and above the market. And we've worked these equal highs. We continue to work the highs. Now we get this reversal. And you want to see it start working the lows now. That's all this liquidity is untouched here. We've just kept working the buy side. We have a reversal. Now, do we stay the course for the lows? And then reach for that liquidity after lunch. Like if you're going to pair up some liquidity on those daily charts, like if you want to go for this daily stuff up here, If you gather up some of this stuff down here, all this liquidity, you gather it up and then start running higher. Just give us a big reversal here at lunch hour and start running it all the way back up for the highs. It's a crazy idea, I know, but that would be just the thing to do for an algorithm, just to screw you over, right? And what's that it says? That's a good idea. It says, I think we'll do that, Darren. Done for the day. Good for you, Curry. Walk away, man. Walk away. So we've had lows taken out here. Still equal lows below us. Body froze right on it. See that? It just came up into the equilibrium of this candle. And I want to see us really start gunning it down now. Thanks, Mom. She's so cute. I got 2 more days left and my mom goes home. So now we're buffing around inside here. See that? Bodies are respecting that gap. We're still at equal lows below us. Do we trade above here and show you a tip its hat saying we're coming back into this range again? See how if you're paying yourself on the way down, rejection blocks, you must pay yourself at rejection blocks. Didn't take that low, and look at the reverse. Trade it above it again. You want to see this take out this high now with a close. Now do we come back and find support inside here? And then you're starting to look for a premium array inside the range. See that? Tippy tappy. You want to see that go higher now? Just taking out these highs here, so that would be a first objective. Come back, close above here. You want to see this provide support here now and start pushing higher again. Well, you want to see it get through here. And I like this upside objective, but see how we've got the equilibrium and the high. So you're between here and here. You want to see that keep pushing higher though. Body's above here. I'll just close right on it. That's the candle I'm interested in seeing if it holds price now. We keep pushing higher. And for me, there's no reason for it to revisit back in here. If it does, it loses its luster for me. Like that. Now you want to see it trade through here. We're bouncing around between these two. Still finding support inside this. I didn't want to see it come back inside here. We've already revisited it once. Multiple times now. It's starting. If it lifts up game and get through here, and there's our upside objective right there. Yep, I agree with you, Derek. And for this entry here, I gave you this one here for a short, and this one here for a long. And again, if you're going to pull your fib tool, not that you're actually going to take any of these trades, but we're just trying to stay in price action here. That's all we're trying to do. So you trade it to 50%, move your stop loss to break even. That hits 62%, just shy of it there. Take half your trade off right there. That's 62% of that. So if we end up optimum trade entry reversal, you paid yourself there, and it just came back and took you out there, which you just did for me. It just took me out right at the 50%. No, we're still looking for that higher time frame, or sorry, that higher objective up here. It was only $60. Now I want to see these highs get taken first before I consider this fair value gap again. This, as you can see, is not clean price action. Yes, you can still see price action in here. You can still stay on price. You can stay on the horse. It doesn't mean it's great trade opportunities. Keep in mind, like array to like array. Michael hasn't taught this fair value gap to fair value gap as a premium and discount. I just like it as a premium discount inside a range. That's an objective to aim for, and it seems to be repeating itself. He does use these as inversions, but then aims for an old high and doesn't look at this opposite side. He looks over here. So I'm just wondering if this is a repeating thing I keep finding. I don't know about you guys, but if you find it, let me agree or see it often, please share. Let me know. So I'm going to watch, and sometimes it just comes up into that equilibrium of this and rejects, or just taps the edge here, rejects, and starts to come back down to the range again. There's equilibrium. Now, if it works right through to the other side, You want to see if it gets through this now and find some support for extending the range. And if it doesn't, then we start getting a pull back down again. You're back inside this range, and there's your discount array again. See how the equilibrium, it's holding price. So if you're just trading from premium to discount, aiming for these lows as you go, and pay yourself at rejection blocks, or wait for your first reversal. So you see this set itself up, and you wait for the first reversal. Here's a reversal. It does not happen. So you say, okay, here's the next reversal. And you go, it happens. So that trade there, you decide you can close it out right here. Then you can get long to run back into this range again for the next reversal that took out this low. So not only is it just an inversion, it's also an inversion after it takes out an old low. We're aiming for this, but don't forget you've got all these lows here as well. It takes them out and then trades back into that range from discount to premium arrays. That's how I look at it. And I look at it as a SIBI with a BISI. Not SIBI, but a SIBI with a BISI. Now I look for this to see if it trades through it and start climbing up on top of it. And look for that last close candle to its mean threshold to get taken. So we'll see now if, now that we've taken this high, and this high, like we did with this low, but not the big one, this provides support, and that candle there or here provides a level of support for us to continue going lower back into this here. So keep your eye on this piece right here. And bingo. See, I tell you, it's something I see here, and I think it's a very continuous, it happens so many times. But anyway, that equilibrium there, it revisited this fair value gap here. And now we trade through it. Now we're looking for these old lows here. See how it froze? The bodies are frozen on it. Wicks are doing some damage. So now we want to see if it trades back up into here. Or this candle here. Now what you'd like to see is, I'd like to see is it come back up, engage this candle, or revisit this, leave a portion of it open, and slam it right back down and take out these lows finally. Then you look for a reversal to gun for the highs. It just came back inside this fair value gap here. You see that? Yes, we cut through candles. It's finding support off that level. That's that equilibrium level I was telling you about for the 3 different levels, 1, 2, and 3 of that larger range. Now you want to see it drill through here and start aiming for this lower liquidity. Didn't quite get that low I was looking for there. It just bounced back off this fair value gap. I'd like to have seen that just wick back up into that equilibrium of that wick, which would have caught this guy here. We still might get it. We're between these two now. We want to see a body extend below here to go lower. Otherwise, we're just inside a smaller range now. Like array to like array. Come on, pop up inside here. You got all this whole chunk of change to reach in for. Anywhere from here to here. There you go. Finally hit that. Now, do we get a reaction right off here? Right off the opening price or the closing price? Nope. Mean threshold or this candle. And then you got the fair value gap above you here. So there's that last little chunk. Ideal entry right here for short. And if you're wrong, it creates above you, comes back, finds support, gives you an opportunity to get out because it's running for these equal highs here and higher. So watch now that we have, I think that's going to go higher. Yeah, that's through that. Now, so let's pretend that you have a trade here. Not that you're going to take one, but let's pretend there's a trade right there for an optimum short. And see if we can't watch how the failsafe will. So if your stop loss is there, it'll either gun for it, take it right out, or if it closes here in the next 7 seconds above here, and you get an opportunity to get out, there's right there, it literally closed on it. Now for me, I wouldn't want to see it come back and revisit that, and I'd be out. My stop loss would move right to here just because I don't want to see it. There should be no reason for it to pop up in here again. You should start driving down. If it doesn't, this is those whole freeze right on the open or right on the high there. You usually want to see it just come up, tap it, and go. You don't want to see a body close on there. Then it starts getting dodgy. It's like, are we going to go higher? Are we going to go lower? So you can see how that stop loss is still not taken out unless there's a spread in there that's going to get you. So we'll see if this starts coming all the way back down again now off of that optimum entry. So now the stop loss would be right up against break even. So I wouldn't want that to revisit there. Now I'll be moving just inside the profit, just paying myself. Just make sure I got pay whatever you cost you for your trade there, because that was a bit nerve-wracking. You don't want to see it come back up there. It didn't. We're just shy of that stop loss there, so we're still going down. Now you want to see it start coming back down through here, through this low here. You don't want to be stuck inside this. So stop loss, I'll be moving right into profit. Just above this fair value gap here. And see, now that's the talk of a man who's more nervous about his trade than he is of confidence of where it's going. So it's more like, I'm just trying to skittishly protect a trade, not with any confidence that we're going to reach for this. But for me, that's the logical level. If we start taking out that fair value gap low on a close, we're looking for this discount array again. So we went from discount to premium. Or sorry, let's just review this whole range here. Went from premium entry all the way down, created a discount inside this new range. You went from discount to premium. We called that. Back to discount, called that. Now looking for the premium, called that. Now we're looking for this discount to trade through it and to it and extend the range down even deeper now. Or what's going to happen is if this low doesn't get taken out and that fair value gap discount array doesn't get taken, then we're banging around getting smaller and smaller and compressing. So watch, if we get on the other side of this on the close, look for these lows. This is a good sign. So you see how it goes from like array to like array, like array to like array to like array to like array. And then one of them has to give way. So this one gave way. See how the body closed below it? You want to come back, find some support in here, leave this open and keep going lower. Or if it does come back and fills that, it's just coming back to this fair value gap here to roll over and come back lower. 50% of that wick, we've already traded through 50% of the wick. So for me, it's got more weakness for lower. When they do these deep stop hunts, do you think that typically causes a bigger reversal move? Well, I think it triggers a maybe when they do these deep stop hunts, in other words, like these little hunts on here or freezing up just before they hit them. I like the fact that they don't take them out. It just tells me they're building liquidity down here. They're giving retail the belief that that's a place to find support off of, which on for abs, you like that level there. You look at this as a support, and then if it doesn't take out those lows, to me, it's just building up liquidity. And I tend to go, okay, what would they like to run back up to? And just keep holding this and then keep building it and building and then drive through it later on. And look at the time that we're sitting at now. We're sitting right at 11, just before 11 o'clock. We've got 5 more minutes. So do you want to take out the liquidity below the market at 9:30, at 11, and then reverse it and come back into the range? That's what I'd like to do. So time, when Michael talks about time and price, see how that level now becomes support. And now we've taken this low out. And I want to see this low get taken out. There's the rejection block. Pay yourself at rejection blocks. And right at 11 o'clock, look at that. What a beautiful time to take a run. So now that we have time and price, 11 o'clock, it's about to hit 11 o'clock. And we're running on the morning's low, which is typically what happens. And then a pull back into the range that was created between 9:30 and 10, or 9:30 and 11. There's the range. So if we pull back into that range, once we take these lows out here, If they don't, oh, then I'm looking for, and if they decide to run back and this little fair value gap stays open after taking that low, then I go, okay, now we're looking for premium rate. Then I'd move all my little wicks here to here, like this, and that guy there. I'd move him to here. Ah, there you go. Finally. So you can see how these staying on the horse here, and you can see how these levels provide support, premium and discount, premium and discount, premium, and then there's the giveaway right there that we're going to extend the range. And we extend the range. At least that's it for me. That's how I think about it's going to extend the range. Now you're right back into the equilibrium of the regular trading hours. Right there. See that? And you want to see this regular trading hours fill now. And then you think, ooh, wouldn't it be great if they could gun that whole, those equal highs and that hourly equal high later. If this holds price, this equilibrium, we'll see if it trades through here or not. It's literally sitting right on it right now. Let's look at the that's this gap here. It's not the open though. The open's here all the way up to there. Sorry, right there is the low. So now we're working through and filling that rest of that range there. That, oops. That regular trading hours gap fill. And all you're looking for here now is just an opportunity to catch a reversal at a logical place that would support price to go higher. That's the top right here. We've just reacted off the top of that. So that small gap in price from here to here has been filled now perfectly. Now we look for an opportunity. So if you get onto the 30-second chart, we get this out of the way now. What a 15-second chart. Michael likes 15-second charts. Let's see if this, there you go, right there. Let's see if we can get above this, find support at this candle here, and start pushing higher. And then we'll do a little, I'm not going to do some crazy stuff here. I'm just, it's a micro anyway. So I want to see this trade above here with a bold candle and close and come back and tap it anywhere inside there. Stop loss will go below the mean threshold of that candle. There's the body. You want to watch in the 15 seconds, see if it closes there. And it does. And You go along there. Nope. Did it go there? There. And we'll put our stop loss below 50% of that. And we'll see if the 15-second gave us our entry. There's our little tap back into there. Now if it trades below that on a close, I'm on the wrong side of it again, it's going to go lower. Look inside here. So if you just trade, there's 50%. Move to break even. Take off half. I'm just going to put a little bit of, I'll pay for our trade. There's 62, you move to 50 now. There's 70, you move to 62. And you make 175 bucks. It fills that fair value gap right there. So this reverses right now, and I got on the wrong side of that. I just captured something really quick off of the 15-second chart inside a small little range here. And then if it comes back into here again, you can start the trade all over again. But anyway, that gives you an idea of what that little reversal right there. You can still snatch it, $100 out of it if you know what you're looking for. So as soon as you see that little opportunity there, you can get down to the 15-second chart, and that was a 70% of the range. We chased it up. So stick on that 15-second chart again. Let's have a look at how it reacts off of here. Support, drop below it, tap it. You're back inside this range here from here to here now. If it closes above it again, you're looking for higher. Otherwise, just look inside here. This is like a fractal kind of look at the market here. See how they were traded below it? Pop back up into the equilibrium, leaves that little piece open. I'd like to see that stay open for a run back into this little range here. Like array to like array. If this stays open, which it does right there, I want to see that pop all the way through here again now and start working higher and leave that open as a breakaway gap. See this return to these old highs here. Doesn't? Okay, so now we're looking for back down here. And see how that little we're on the wrong side of this. If it's still going to go lower, we still captured that quick little return there on a 15-second chart to 70% of this on optimal trade entry reversal. And I just want to see it come back down into here. Find support off that order block. We came back to this guy here. Once again, now you want to see it pop through here. If we don't get that array, great. There's your breaker that takes out these lows. We come back to the breaker, running up, and I want to see it pop through here and start going higher now. If it reacts off of there, we're stuck between these two right now. So for extending the range higher, I want to see this climb up on top of the rocks. So we got these flat rocks here. You want to climb up on top of them, get some footing, and then start pushing for these equal highs. Start digging into this range here. Then I'm just going to start pulling from the high here to the low, and I'm looking for 50%, blah, 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 all over again. Now, do we find this is the ledge, the support level, that breaker, to give us our continuation to the upside? So watch this level here. I should have marked that as the breaker. Right there. This is a little more fun because it's a little quicker. It's a great way to study kind of price action if you know what it is you want to see. And you can quickly identify your levels and you say, okay, let's move it a little faster instead of minute by minute. You do 15 seconds by 15 seconds. So now we're right back up and fill this little fair value gap here. Now we're popping through it. Good. Find some support here. And keep on trucking. Right there. Put your stop loss down by the breaker here again. Now we got this rejection block, equal highs. I don't want to see it start digging through that now. Off this candle here. And I want to see it get some legs, start really moving up there now. You don't want to see it waffling around here. Let's get out of Dodge now. Let's go. Now, for me, it shouldn't have to revisit these lows. I'm going to put it just below the mean threshold of this candle here. See if we can get a little more lift here. And we're just paper trading this. It's still really, really messy. Price action, even on a 15-second chart, It's not really clean. Now it's traded below it. Come back, find support at it. So I'm closing that one out. Oh, okay. It took me before I wanted to get out of there. See how it trades below it? That gives you saying we're back inside this range again. Now you got this low below you here and this breaker. So it should come back, find some support inside here. If it pushes through here again, you're literally banging off of this guy here. Lower, higher, lower, higher. Wait for it to take out one of the highs or the lows now. Find some reset and get back in sync with the market. Right now, wait. Hey, DeMilo. So you've got between here and here again now. And we've got a little support with a breaker. So if we start eating through the breaker and digging into here, these are 3 key levels I'm looking for right now. So you're looking for, watch how price action bounces off of these levels and uses the consequent encroachment, or the higher the low. There's not a lot of wicks to play with inside here. So now I've got just inside a small range, I've got a premium level and a discount level. I think that's a discount. Let me have a look. Equal highs. Yep, just into discount level here. So if we run through this, find some support at it, look for the mean threshold of the candle here. Or from high to low, that's a breaker, takes out this high. Take the 50% of that. There's 50% of the breaker, of the small bullish breaker. Get some legs through here. Equal highs. You've taken the low. Now you want to see it pop through here. Just watch how price action acts around the levels that you're interested in. If they keep running through them and the area is not supported in any way, then it's probably not an order block or a candle that, or a gap that's of consequence. And I always like to hold on to them once the range is completed. And then as the range is completed, they start to lose their strength for me. I start to looking for a new range, new fair value gaps created in new small ranges, like this guy here. But because he overlaps that one, we'll keep him intact. And I'm only going to give this a few more minutes, another 14 more minutes, and then I'm out of here. I got a few more days left with the family, so we'll see how, I'm just going to have some fun with them. And then next week, I'll be back, and we'll probably stick around a little longer next week. I do have a hypnosis session I'm doing with somebody next week. We're working on turbulence, dealing with turbulence. So I'm doing a hypnosis session for somebody on that. It's not like I do a lot of them, but there's the consequent encroachment. So here, come back up into that level here. See if we get support off this order block. If not, run up in here, and we're kind of bouncing off these two right now. Well, this is just a way to study price action. Like on that 1 minute chart, it's painful right now. It's just very cluttered. And this is a 15-second chart. And look at how choppy it is inside a 15-second chart. You can see some real clean action here. See how you've got this reversal here, body trades below it. You don't get an opportunity to get on that. You wait for the next one. Trades below it here, you come back up to it here, nail it nicely, and continue on. Reversal, trade back up in the range. We got that one already. Reversal, trades through this on the way down, comes back, finds support at it. We're back to our discount array, premium to discount. We're through the discount now. Now we want to see the range extend lower. That's why you put these levels and you make sure, are they providing you levels of support? Are these key levels being triggered? And the mean threshold of this candle here. On the 1 minute chart, you pull this little fella right here. There's equilibrium, right on the money. Go down to that 15-second chart again. Equilibrium's right here on the 1 minute chart, and there's the equilibrium or mean threshold of this candle is right close to here. So do we start trading through this candle? I think we do. We just came back up to the breaker, reclaimed it, and now we're going lower. So we traded through the breaker, back up to it. And you want to see this continue pushing down now. Remember, there's that little teeny piece below here that wasn't quite filled yet. It's the rejection block again. Did you pay yourself at rejection block? So you got liquidity above the market right now. We're just keyed off this rejection block. These little lows have been taken. Not a significant reversal right now, so you're just looking for fair value gaps. There's nothing in here. There's a little imbalance right here. We'll see if it comes back into that. Then you want to start saying, are we coming back up into this range again? I want to see these two candles here get taken to the upside before I consider that. And that inside that range is above premium already anyway. So unless we get support off of this, which you've got right here, you want to see that continue pushing lower now. Asian low, yeah, hands. I think that's where we're looking to run. I do like the idea of 393. We're going to see a snap now. Snap down. We're in consolidation now. So watch here. To find support in here, start pushing higher. Off this breaker. We just took out these little highs here with these two candles. Does that leave it open and we start running higher? I want to see it come back down through here, take these lows. If this provides a level of support right now, watch that tap there. Are we going to run through it or just find support at it and start going back up again? Body closes on it. Mean threshold of this candle. Back to the open. Okay, there you go. Now you want to come back, find some support at this little fair value gap here inside this breaker. Real place. If it trades through here and comes back to it. This was the same thing we had way up here. Doing the same thing again. We want to see that that does not go above that level. If it does, then we've closed above it right there. Oh no, we didn't. We'll keep poking above it here. We've took out these lows. There's a little fair value gap right here. I just saw it right now. Little tiny one. Let me stretch this out for you. See that? The low's taken. Swing here. Pop above. Come back inside it right here. And we're in a 15-second chart. So yes, the algorithm does the same thing down here. See that? Came back full fill. I want you to see that. See that? It came full fill of that thing and then start pushing higher. To the rejection block again. Get yourself at rejection blocks. But even in the 15-second chart, you can see it. There's this imbalance. Trade above the imbalance, back to the imbalance, start pushing through higher. It's a sexy thing, man. I tell you. It's a sexy thing. There's another imbalance right there. Push higher now. So you can see when it changes its mind, it's taking these lows here. I'm going to trade above here, give you an opportunity to get in and then go higher. This could be a 1 minute chart, 1 hour, 1 day chart. Doesn't matter. Like Michael says, it's all fractal, right? Taking out these highs now. This area becomes important. What a choppy mess. Now we substituted all that mess on the 1 minute chart, thinking that we come down to a 15-second chart and start getting a little more sexy in here. But look at how shitty this is. Do you guys really want to be in this? Do you want to be playing this kind of stuff? No, but boy, is it ever fun watching price action, hey? Just studying price action right now. It is cool. Find support off this candle's open. Let me get this out of the way here. I'll be right back. Gotta go to the bathroom. Okay. And the continuation begins. So you're right, Hans. The Asian low looking for 393. As soon as it hits 393, that'll be it for me for the day. I'll be signing off, and I'll see you guys on Monday. Are they areas of interest? Ask yourselves, are they important levels that provide support or resistance? Oh, let me just draw this guy out one more time. This is the 15-second chart, don't forget. Watch this. Remember that one little guy we caught here? We came back, hit it, ran for highs, back to an old support level. We're looking for support. You wanted to know if it was going to get above that, back through the breaker and higher. It traded back through that level. Old lows. Came back right up inside it one more time. Probably traded lower. Now looking at this big old breaker here. Taking out that high. I like the most sensitive candle here. We get some support off of that. Watch here. See if we get a reaction off that. Nope. Imbalances. Fair value gap fill. Back to a breaker. To support. On a 1 minute chart, that was a fair value gap fill. Back to a breaker. Took out these lows. Swing. You've come back inside the swing. You want to push higher now. I'm going to see these highs get taken. This big fair value gap below us here. Let's see if that provides support or not. If we get through here, it's a reverse. Not above a swing, but just a reverse. And we've closed above it. There you go. Interesting level, hey? Do it here. Fade it all the way back up into it here. And you want to see this candle get taken on the downside. And then we're getting back into this range here. And we're still inside this candle here, or this big fair value gap. Gotta see this get taken here, otherwise continuation on the upside. This big fair value gap here. Wow, you can see so many different let's look at this as a, I'll put it as a 1 minute because I don't have a 15-second chart here. Through this, find support off that level again, important level. Look at how many times we've hit off this level. Multiple times find support, resistance. So I like to see that continue for upside liquidity now. All this stuff up here. Now that you've run out all these lows, it'd be nice to see some upside runs now. And if we come down one more, 413 was 50% of the wick created on the 29th at 2000 hours, where this is 50% of that wick. So if that's the resistance, if that's the reaction we get off of that, you don't want to see that wick get taken again. But if you do, then the low at 395, you have to take this low out here at 395 and into this box below you here. And you're constantly looking for this level to support level, support price. And see how we've come back into it, traded below it or inside it, above it. It's becoming a very key level. $691 relative equal highs. Yep, that's what we're looking for, Dave. Monday high of the week, Wednesday low of the week. Anyway, that's going to be it for me, you guys. I'm checking out now, so those are the levels I'm kind of interested in seeing how well we hold. This is all consolidation here. You want to see a big bold candle get above this, and this consolidation, use it as a CAM model entry for a long, or we're back into this range again. I want to see this fair value gap stay open. I don't want to see it revisit down here. If it happens to revisit there, it's fine just to run the liquidity out before going higher. There's a small little imbalance right here at 441. That would be enough to take out all this liquidity here and then start running for all this stuff up top. Anyway, that'll be it for me. Thanks a lot for tuning in. Those who have, I appreciate your time. I know you've got the boss out there. He's out there talking up a storm. Let me see if he's still on here. Yep, he's still on. So if you want to change over to him, if you haven't already done so, you should be. You should be listening to him, not me. And see if he said some similar things to what I'm saying. I'm going to check with the video later to find out whether or not he was saying if I was even remotely in the same ballpark as he was. But other than that, thanks again for every one of you who turned out. I appreciate your time, and I will see you on Monday bright and early. Have a great weekend and be safe out there.